So this is why not all stock behave in a similar fashion. Um, this is Amazon. This is a stock that behave technical on many occasion, and as a day trader or a technical trader, you want to follow stocks that have patterns that are rather predictable and behave in a technical fashion. And when I mean technical, I'm talking about just significance with levels and indicators, signals that you can use to predict with a higher probability of success over other stocks that their behaviors are more characteristic of other factors, human behaviors, momentum. Tesla, for example, is a stock that doesn't behave technical in a lot of fashions. Now, will, many stocks, almost every stock will transition from being technical to non-technical, and Amazon is no exception. So when they deviate from technicality, this is when you can get into a lot of pain. And I'm going to use the example on this key point right here. This happened, this little doji tail um, candle where that day it went below a key technical level, which is um, this red line that indicates, which is near 3200, which is near the 50% Fibonacci. It dipped below and it recovered, and just this signal alone, which you don't find very often. Here is another signal, very similar. Um, and this signal too, where it recovered from the 200, dipped below, didn't test the 200, and then recovered. So this is a doji tail. These are very similar candle that display a reversal, and of course this reversal lead into an explosive movement, a very explosive movement, that caused a lot of shorts to cover. I essentially call this a push slash short squeeze, massive, slight consolidation, and then of course a test of the 20 or close to it at a key technical level, the 38.2 right there, and then another explosive move higher at this point to this technical level, which is the top at the time, and then it fell right back down to another level. Didn't test the 200, so this range right here became a Fibonacci data point or range. And so this right here was essentially the first time, not the first time, but it is the first time since the whole COVID, during this rally right here that happened in April, May, or actually it's in late May, and then in June all the way to August, all the way, to September. This pandemic rally, it did not have another similar fashion of that rally until you got this signature right here, an explosive push, short squeeze, and of course it showed it again on this signature. Very similar signature, explosive movement, consolidation, then another explosive movement. This time a retracement and then a recovery, and of course earnings collapse, and now it's at essentially at the low, with this whole new data set. So with any stock, you cannot 100% say that it's going to perform the way it did in the past. However, there is enough indication at this point to tell you that another signature of this similar fashion, where it tests right here, it's a test of a 200 and then a failure, but then a doji tail, an explosive movement higher. similar to here, a test, recovery, and then a retest, but went below, doji tail, explosive movement higher. So are we in a similar fashion? This right here went down to the 200, but this is not the same doji kind of signature. It needs to go down to the 200. Well, you say, well, what about this 38.2? Yeah, that is a key technical level, but this 200 is also a key technical level. So you can say, well, is the 200, I mean, it didn't go down to the 200 right here. You are absolutely correct. From this sell off, it did not hit the 200. I would love it to have hit the 200. It did not hit the 200. And likewise, this did not hit the 200. And you might say, well, it's close enough. This is recovery. I still would like it to test the 200, maybe penetrate below it. So the target I have right now is actually this key technical level, this 50% Fibonacci, which line up with this level that is a significant level. And the point is at this data point. This point right here is the trigger. This is the trigger, the catalyst, the signature that results in this explosive movement higher. So you might see a point where it consolidate and just run in a range, a small tight range, before it breaks and touch the 200, maybe even play around the 200, and then go down to this level. Um, and then at some point it will maybe re-engineer or re-display this similar movement. I'm not really expecting it anytime soon. I think it's too close. And you can say, well, look at this. This is in mid-May, and a month later is when the explosive movement occur. I don't think this type of collapse right here is the same as this type of collapse right here. When you collapse at a higher level, at this point, this is the all-time high, and you have this earning collapse. This is a lot of damage. This damage is a lot more than this damage. This damage right here is nowhere close to the damage here. So when you have this type of damage, it's gonna take some time to mend before it goes back. And the same thing with Tesla. I think when Tesla, let me see if that was the case. When Tesla collapsed, I think during this point right here, it took a while before, and actually it hasn't gone back up to it. Yeah, so when Tesla collapsed here, it went down again before it tried to re-engineer up. And at this point, it could have kept going up. We don't know. I mean, now we know it went back down, test this low, and now, like I said, when you have this type of damage, it's gonna take a long time before it gets back up to this level, if at all. Now, I don't know if I think Tesla will get back up to this level, but this 900 level, but it's gonna take a long time. And that's gonna be the same with Amazon, and any other stocks for that matter. So going forward, um, a good technical signature or a good indicator of what direction it may go is the option volume, because you have data point back here doing this explosive run up that happened during I think it was June 5th or so, June 7th. Um, this explosive movement higher, where I'm going to show you right here on the 60, just to indicate uh, the 60-minute trend line is very significant. So you can see the 60-minute trend line, and this is the explosive movement higher right here on June 7th. So it recovered, it dipped right here, this candle right here where I saw this happen. And then you get these green candles that came about in a massive gapped higher. I love how they did that. Like, you can't tell me that this is not manipulated or engineered. Like it went straight down below a key technical level, flush out anybody who was holding out on, I guess, a recovery, and just hit any stops that were placed below this level. Take out those stops, then rebound, gapped higher so that you essentially have to chase. And at this point, it's just you just gotta chase. It's so hilarious. And then the next day, open flat, push immediately. So at this point, it's just a squeeze. It's just a squeeze again. Um, open flat, and then boom, push higher, push higher. So it's almost as if it's closing high of day. During this push, it's always close to high of day closure. Um, yeah, the only time it didn't was during this one where it consolidated. Well, actually, this is a gap up, I believe. So it ended like the low of the day if you include the gap up. But most of the days are actually high of days. High of days are the green candles or high of days where it's really forcing you to chase. And if you know that they're forcing you to chase, that means it's a massive short squeeze. So that's a signature that you want to remember. And you also, if you look at the option volume during that period, essentially it was humongous option volumes. You'll see something in the 15, 20,000, 25,000 range. Um, and of course, the other ones will be like much higher, 5,000. You see across the board, extremely heavy volume on the call options. The call options are always going to have more volume than the put options. So you got to normalize it a little bit when, like right now, it is balanced. Even though you say, well, look, there's more call volumes than there are put volumes, but that's always the case. You gotta understand that if that's always the case, you look for relative difference. And right now, the put options is actually heavier than what it normally is, and the call volumes is actually lower than it normally is. Even though you see more volume on the call side, these put volumes are actually indicating a negative or a at best a range trade to a negative bias. So that's why I was suggesting on the daily chart that most likely is going to test the 200, and at that point it may recover or it may break below. I'm expecting it to break below the 200 and go to this 50 where it's similar to this pattern. And then at that point we'll see what would happen. But you can see Amazon is a technical chart, and it's a good chart to play, a good symbol to play, because the predictability of it is much higher due to the technical nature of Amazon. And it, you got to be careful when it is under manipulation. It's always under manipulation, but the manipulation that is most dangerous, where you have a higher risk reward scenario, is doing this push, and conversely you might see it doing this, I guess, this flush. In this case you don't get a choice because it's just a massive gap down. So all the diamond hands or all the accumulator of Amazon doing this massive push. I mean, this is, to be honest, I mean, no one, it almost seems like it's not even real. Like, why would it push it like that, knowing that it's gonna collapse? Like, there are people who know at this point that earnings and guidance, and due to the reopening, the numbers are not gonna be as great as there wasn't really any news to stimulate this. It's just because of this one data point, and then it's just herd mentality. Herd mentality is took over day traders, hedge funds. They just pound, 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 and squeeze the shorts out. And same thing with game. You see that with game. I mean, every stock potentially can get hijacked and display this. These type of behavior, the inverse of it, were the typical behavior of normal stocks, where it goes through, like, that's why they say it's always a escalator, an elevator way. Going down in the stock market is like an elevator, and going up on the stock market is like an escalator. Well, it's not that way anymore. I mean, here it is. This is an elevator ride going down. But even during this push, you can say this push is a type of elevator movement going up. So these type of signatures, these type of behaviors that were not transparent, or were not as recognized, or occurrence were not as significant, not as much during the past, have now become not only prevalent but quite, um, almost like a guarantee, like it will happen. So it will happen again. As long as the Fed continues to print, you will get hijacked of this stock, Amazon or Tesla, Game, for example. You would get hijacked of it, and I'm sure Game we're gonna get to 300 again after it gets, hopefully it gets to 100, and then it may or may not to get to 300, but from 100 it definitely should get to 200, maybe even 250. So that's a huge gain. I'm not gonna get it at this level, but anything lower, I would definitely look into it. Even though it is a high risk stock, I just think diamond hands are still in play. Diamond hands are just not gonna disappear just because, you know, a stock behaves or go in the negative direction of what is expected, because they will not sell irregardless of the condition, whether it's a down bias market or a condition where it's just being forced to liquidate margin call or not. Then they're not going to cover it unless they really have to. Amazon, I think, at the way it looks is, you can expect to have another one of these massive push slash short squeeze, where it's just compounding, people just going in, just a herd mentality type of stampede, and hopefully it will have another signature like this. However, these signatures are starting to get played out. The thing with Amazon, and maybe and a lot of other stocks as well, is they don't like to repeat similar pattern. In this case, this doji tail, this candle with a low, with a tail and a recovery. They don't like to reproduce that. So having that signature for the third time is a little bit, um, not the way you would expect. I think they would not want to redo that, because they don't want you to be conditioned into following, they want to trick you. Essentially, it's almost like if you play the opposite, you will be correct. So it's like here you see this 200-day moving average, and this candle is, it's a recovery candle, and this one hasn't reached a low. So if you look at this, you can say, let's look at the 15. You can say, well, look, it's at the 38.2. This is a recovery candle. It fails the 15, but it's going to test the 15 again. This trend line of the 15 is going to test it again, and then the next test is going to break out. That is what they want you to think. My expectation is it may get close to the 15 and then fail, and then it'll just continue to go lower. And once it continues to go lower, it's gonna end low of days. It's always does that. Like, it'll go low of day, low of day, low of days. See, the high of days or low of days doing these explosive movements. And of course, during these type of range bound, you have days where it's technical, technical Friday, technical Monday. So I mean, Monday might very well be a technical Monday. Um, and then of course Tuesday then would be a retest of the 200. Wednesday would be the breakage. And then once Wednesday break, Thursday and Friday can lead you all the way down to this level. Keep in mind, Jeff Bezos, I believe, has not sold his quarterly shares that he's allocated to sell. You can track that into on the insider Nasdaq insider trading. Just pull up Nasdaq insider trading on Amazon, and I haven't seen any shares that were sold by Jeff Bezos for this quarter. Last quarter, he sold it starting in May 10th. So right now would be the time where he should begin selling, and it may be this coming week. So if that's the case, then it's most definitely will, if Bezos is selling, there's just not enough buyers, and easily will break the 200 and easily will break the 50. Probably can get to the 61.8, maybe even penetrate below. Um, but he may not sell. You never know until it actually happened. My expectation is, you know, you just gotta be aware of technical level, and you gotta be aware that right now, Amazon is behaving technically. I don't think this push scenario is gonna happen again, or any, not yet, not until it at least break this 15. If it breaks this 15, then it may, and you see a lot of call volumes. And I believe this is, yeah, this week, this coming week is um the monthly option expiration for August, so it's gonna have a lot more movement. Since it's the monthly expiration, you might be able to expect a recovery. I don't know, but anything, unless of course if Bezos is selling, it's going down regardless if it's whatever technical level it should, it's just gonna go down because I believe this right here, yeah, this is doing that earning run up, massive earning run up. You can see this doji tail, and then this doji recovery, and then boom, this is a whole earning run up that results in a push, that short squeeze, and all of a sudden, bam, for no reason. I mean, it was good earnings. I mean, it was excellent earnings at new high. How is that even possible? Or at least hit the new high or retest of the new high, and then it failed, and then it just collapsed all the way down to this level. Well, it actually because Jeff Bezos was selling. So this is a good, from 3600 all the way to this range, which is 3100. I mean, that's a good 500 points, close to 500 points. So you might see another one of that. I don't think it'll be as impactful because this level right here, is already, there's so much damage right here going from above the 138 on the Fibonacci now at the 38.2, and with the selling going down to the negative 61.8. So that's quite a recovery. I mean, not a recovery. That's quite a retracement. But that's my expectation at least. So that's where we at.